Hey everyone! In the fast-moving world of the stock market, one of the biggest stories in recent years has been Palantir Technologies. If you've been following the markets, you probably already know Palantir because it became the single best-performing stock in the S&P 500 during 2024. And even now, heading deeper into 2025, many investors are wondering if Palantir can repeat that impressive run. Palantir's momentum largely comes from its ability to position itself right at the center of the AI revolution. The company has been extremely successful in integrating artificial intelligence into its government-focused software platforms, while also making a strong push into the commercial sector. This dual approach has allowed Palantir to scale far beyond what many analysts originally expected. But Palantir isn't the only player in the artificial intelligence space that's working closely with government clients. One company that has been drawing increasing attention, especially among retail investors looking for the next Palantir, is Bigbear.Ai, which trades on the New York Stock Exchange under the ticker symbol Bbai. Unlike Palantir, Bigbear is a much smaller company, but it has some intriguing government contracts and growth opportunities that make investors wonder if this underdog could eventually turn into something much bigger. So, the question on many minds is this: is Bigbear.Ai worth buying, especially now that the stock has been beaten down after its latest earnings report? Let's dig into the details. Bigbear.AI, a government-focused AI player. Bigbear.AI is headquartered just outside of Washington, D.C. in Virginia. Its location is not an accident. Being close to the nation's capital and major defense agencies positions it strategically to win government contracts. The company focuses heavily on defense and intelligence, delivering AI-driven solutions that are designed to be mission-ready. That means it doesn't just develop generic AI software. It creates systems that are specifically built to help the military, defense contractors, and intelligence agencies make smarter, faster, and data-driven decisions. One of its most notable achievements is a $165 million contract with the U.S. Army. Under this deal, Bigbear.AI is tasked with modernizing and incorporating artificial intelligence into Army platforms. In practical terms, this allows commanders to sift through mountains of data and use AI to guide both training exercises and the mobilization of soldiers. The idea is to make military decision-making not just faster, but also more accurate and less prone to human error. Outside of this large Army contract, the company is also involved in smaller but still meaningful projects. For instance, it has partnered with Hardy Dynamics to integrate machine learning into military operations. On a completely different front, Bigbear.AI is also working on a program that uses biometric software to improve passenger processing at major international airports. This initiative is being tested at airports in cities like Chicago, Los Angeles, New York, Denver, Dallas, and Charlotte, North Carolina. The idea is to streamline the process of verifying passenger identity while improving security at the same time. Bigbear is also trying to benefit from political momentum. During the Trump administration, there was a heavy emphasis on expanding the use of biometrics for border control. Bigbear's management still views this area as a massive opportunity. They estimate there could be a $70 billion market tied to increased U.S. Customs and Border Protection funding, along with a potential $673 million market specifically for biometric border control projects. And Bigbear isn't limiting itself to the U.S. market either. Internationally, the company has begun pursuing opportunities in places like the United Arab Emirates. In fact, it's already working on AI initiatives there through partnerships with EasyLease PJC and Vigilix Technology Investment. These deals broaden Bigbear's footprint and demonstrate that it's trying to diversify beyond just U.S. defense contracts. Recent challenges. All of that sounds promising on the surface, but the real test of any company comes when it has to report earnings. And unfortunately for Bigbear.AI, its most recent quarterly results were disappointing enough to rattle investors. To put things in perspective, during the same period when Palantir shocked the market by crossing the $1 billion revenue mark in a single quarter, Bigbear went in the opposite direction. Its revenue actually fell. Specifically, the company reported just $32.5 million in sales, which was down 18% year over year. Management blamed this decline on lower volumes from certain Army programs, which raises concerns about how dependent the company is on its government contracts. The losses were also eye-opening. Bigbear posted a staggering net loss of $228.6 million in the quarter. For comparison, its loss in the same quarter the previous year was just $14.4 million. So what happened? The company explained that most of this ballooning loss came from non-cash factors, such as $135.8 million derivative liabilities tied to 2029 warrants, as well as a $70.6 million goodwill impairment charge. While these are accounting adjustments and not cash expenses, they still highlight financial pressures that the company is facing. Perhaps the most alarming move for investors was that Big Bear decided to withdraw its adjusted EBITDA guidance for the year. Management cited uncertainty about the Army programs and upcoming investments that would weigh on near-term profitability. Whenever a company pulls its financial guidance, it almost always spooks investors because it signals that leadership isn't confident about what the future looks like, at least in the short term. This cautious approach from Big Bear stands in sharp contrast to Palantir, which not only grew its revenue by 48% in the same period, but also continues to add massive new contracts at a rapid pace. Comparing Palantir and Bigbear.AI. If you're trying to decide between investing in Palantir or Big Bear, the differences become clear pretty quickly. Palantir is growing at an extraordinary rate, with hundreds of deals being signed. In fact, Palantir closed 147 contracts worth more than $1 million each in just one quarter. Big Bear, by comparison, seems heavily reliant on just one large Army contract. If that revenue stream slows down or ends, the company doesn't yet have the breadth of contracts to cushion the blow. That said, there is one area where Big Bear does look attractive: valuation. Palantir currently trades at an eye-popping price-to-sales ratio of 117. By contrast, Big Bear's price-to-sales ratio is just a little over 9. This means that from a purely numbers standpoint, Palantir looks extremely expensive, while Big Bear looks much more reasonably priced. For some investors, this valuation gap is the reason to take a chance on Big Bear. After all, if the company can turn things around, win more contracts, and stabilize its revenue, the upside potential could be significant. On the other hand, if those contracts don't come through, the downside risk is also very real. So, is Bigbear.AI a buy right now? The answer depends largely on your risk tolerance. If you're looking for a proven player in the AI government space, Palantir is the safer choice, but you're paying a very steep premium for that safety. If you're a more aggressive investor who is comfortable with uncertainty and the possibility of volatility, then Big Bear might be worth watching on a dip. At the moment, however, the company hasn't shown that it has the same ability as Palantir to secure a steady stream of high-value contracts. Until that changes, it remains a speculative play rather than a reliable investment. This is not financial advice.